On the line right now, our good friend from CNBC, Larry Kudlow. Larry, how are you?
Good morning. Good morning.
Oh, I want to start out by talking about the stock market of late, which has we sort of went through a down period, and of late it's been coming back up. When we last talked to you, you said don't be surprised if we do enter sort of a bear period.
Yeah, I mean,
we should be on the lookout. You said, be careful.
Right. Keep your eyes open. I'm not so much a bear. I'm just saying I'm not the bull that I was, because you're going to get a big change in Fed policy. Basically from ultra easy to more snugging. A little tighter, and keep your eyes open. What is interesting though was on Friday when you had that pretty decent jobs report, not spectacular but very decent, right? And long-term interest rates bounced up about 10 or 12 basis points, which is a lot in that game, and yet stocks shook it off and rallied by whatever they rallied by. I think it was about 100 points or some such thing. The thought occurred to me that the rise in long-term rates, which is anticipating the Fed's drawdown of their bond buying, the so-called taper, the Fed's going to buy fewer bonds, that may have already discounted the whole thing. Yeah, 100 basis point rise in rates. It happened real fast, basically in May, June, early July, basically May, June. And the thought occurred to me on the show last night that maybe the marketplace, in its wisdom, just took out a whole bunch of Fed actions right away, just did it. And if that's the case, then the stock market will be certainly a little less difficult, depending on how earnings pan out in this quarter, and things may not be quite as bad in terms of market conditions as I originally feared.
Larry Kudlow, you mentioned the Fed and how much the Fed factors into what's going on in our economy right now. By the way, Brad Thor is going to be our guest tomorrow. His brand new novel, the thriller, focuses on intrigue at the Fed. So I'm very suspicious of what's going on over there.
Brad Thor's great.
Isn't he great? But listen, Larry, they're talking about the fact that Bernanke is going to be stepping down at some point soon. And did you see the Wall Street Journal seems to be making the case here for Larry Summers as the Fed chairman? What do you think of that?
Well, I don't think they made the case. I think what they said was that his name is in the mix.
He's available.
And he's very available. In fact, he had an op-ed piece yesterday about tax reform in the Washington Post. So, yes, he's quite available. What do I think of that? Well, look, Summers is a smart guy. There's sort of two Larry Summers, okay? I'm not sure which one would resurface. The Larry Summers of the Clinton administration, who worked for Robert Rubin in the Treasury Department, was a sound dollar fiscal conservative. That was the Larry Summers then. The Larry Summers that came in and worked for the Obama administration was one of the authors of one of the most massive budget spending fiscal stimulus package in the history of the earth, one which, I might add, did not work, as attested by the very weakness of this economy, which is still no better than 2% in the so-called recovery. So, which Larry Summers would be the one?
Well,
would
to be fair,
the Obama one, or would it be the Clinton one?
To be fair, it seemed like reports at the time when he ended up leaving the Obama administration, he was clashing with a lot of the other people on the president's economic team over that stimulus, wasn't he?
Not by the time he left. I mean, he was one of the authors of it in 2009.
All right.
He left in, late 2010. The deed had already been done. We haven't heard much from Summers on those issues, by the way. He hasn't really spoken out on those issues. So I don't know. With Larry Summers, look, I want a Fed chairman with some rules. This ad hoc tinkering, tampering, short-term focus has not worked, okay? And I think that they had either target the money supply or target nominal GDP or target gold and commodities or target the dollar or use the John Taylor rule, which kind of is inflation plus GDP, something like that. We need rules. We need predictability.
Yeah.
We need greater certainty in the Fed. There's too much ad hocery going on. And those are my criteria. Would Larry Summers subscribe to those? It's possible. I just can't tell you because he hasn't talked about the Fed in a long, long time. In fact, in that article you cited, he specifically said that he wasn't going to talk about the Fed. So I thought that was rather odd. He doesn't seem to have a policy agenda. So it's real hard for me to figure out, again, is he going to be the conservative Larry Summers of the Clinton years, or is he going to be the liberal spending, stimulus Larry Summers of the Obama years? I have no way of knowing.
You talked about the jobless number. You said the last jobs report was decent, not great, but decent.
Right.
But as I look down deeper in the numbers, I find that there are some 8 million people in this country who are being employed right now part-time. Mm-hmm. And then you look at the numbers about the number of people who have become discouraged workers and who've basically fallen off of the numbers because they've just gotten so discouraged they've given up looking, and that's like 11 million people. That comes to 19, almost 20 million people who are sort of either working part-time or have just given up completely. Then I saw another statistic that said there are more Americans right now who are taking food substance assistance from the government than aren't. It really almost, when you look at numbers like that, it's sort of discouraging about where we are. We talk about the death spiral of the economy. These are not very flattering numbers.
Well, I agree. Look, 4 years plus later, all this, stimulus spending by Obama and regulating and Obamacare and all the interventions, this is not a free market crowd. This is an intervention, government, activist, statist crowd. Have not worked, have they? Isn't that what you're really saying?
Yeah.
And this is the weakest recovery in modern times, going back to 1947, whether you're measuring jobs, where they're about 3.5 to 4 million short of where they should be just for the cycle, or whether it's GDP, which is slightly less than 2%, it ought to be 4 or 5%. So, yeah, those policies have not worked. Regarding the government benefits, yeah, food stamps, records, Social Security, disability insurance, those are all forms, I think, of unemployment compensation that people have figured out how to game the system, in some cases with the help of the system, right? The Agriculture Department is running advertisements telling you where to sign up and how to sign up. This is a government-dependent recovery. And regarding the temps is a little trickier. We looked at that in a segment last night because somebody wrote a well-followed blog site on Friday, said all the jobs that came out, at least in the household survey, were temps. And actually, that was a misreading of 1 month data with bad seasonals. We've actually created, just to defend what little there is, we've actually created a lot more full-time jobs than people let on. In fact, let's see. In the last 12 months, we've created 195,000 part-time, but we've created 1.4 million full-time.
Wow.
You're running about 200,000 private sector jobs now, pretty much on average for the past 6 to 12 months. So I think this temp thing is overbaked.
I got you.
Okay.
We're well below where we were a couple of years ago in 2007. But look, you're saying to me this is a weak recovery? I totally agree.
Okay.
That's the deal.
Well, we're going to have to leave it right there, Larry. Thank you so much. Always a pleasure.